Great, I'm back again. This time we'll be talking about the daily trade system that I've been doing for a very long time already. Before I was doing it on the FTSE and the DAX. The DAX really delivered some very nice trades, but then unfortunately by spStrategy you could trade it on demo, but the live account wouldn't trade. And ever since that happened, I've just stopped trading the DAX and I've started concentrating on the FTSE. But this year, 2019, the FTSE, with the Brexit going on, the FTSE has been very unpredictable, and there hasn't really been any major wins there. Therefore I started shopping around, and I found that the SP to be a very good instrument to trade. Now, with that said, as you can see, I am using the trend indicator from spStrategy, which I had bought many years ago. I've been using this indicator, well, I can't even tell you how many years. It's a long time that I've been using this indicator. I must say, the indicator on itself is not a trading strategy. You can use it to support your own trading strategy, or if you can design your strategy around it, which is basically, I took my strategy that I was doing and I implemented into the spStrategy trading system. Now I must say it's very good. I trust it. It's very reliable. Like for instance, we'll show you here now on the SP 500. You can see the breakouts, which is these threes over here, is 82% accurate. Now that doesn't mean that you're going to be reaching the target the way I've done it every time. To give you an idea, these signals here will appear only once this candle opens. When this candle closes and that candle opens, this signal will appear. Now when the signal appears, I normally go and I'll look at the candle and I'll draw my Fibonacci's right from the top, from the high to the bottom. Right, so now my entry is going to be just above the high of that candle, my stop loss just below the low of that candle over there. You can close it because this is a non-repainting indicator. It doesn't repaint. So you can close, you can open up, your signals will be the same. They don't change. That is what I really like about this indicator. And I must say, really, the amount of money I've made using this indicator has paid for it over and over again. But anyhow, nevertheless, as you can see, we were entered here into the trade and the trade went up. The minute I got a close here, which is above the 161 level, I brought my stop loss to break even. I went to put my stop loss onto break even. Then I trailed it and I watched it every morning when or this one at least in Cambodia is in the evening, at about 8:30 in the evening. It's when the New York Stock Exchange opens up. That's when the SPX starts trading on the spStrategy candles. Now here you can see the minute I got a close above the 261, I brought my stop loss to the 161 level, and then I just let it go for the 3. Let me just bring this level down here, this line down. You can see there's the 3 target, and this candle over here eventually took us out of the trade. Now you can see that is from here, what is that, it's the 4th of January all the way up to the end of January. It's a long time. It's a full month that you've been sitting in this trade. But when you look at the kind of pips that you make using a system like this here, you know, the FTSE delivers, the SPX delivers very, very high returns. I mean, I think this trade here delivered almost 15,000 pips. Now, the value per pip is not the same as when you're trading currencies. This works completely different. Your margins, the pip value, everything works completely different to what it does with the currencies. Plus also the charts on the by spStrategy, they do not run 24/5. They only run during open market hours. Now due to the fact that I cannot trade the SP on InstaForex, I also have an account by DarwinX. So what I do is I will check my values and my entries over here, and I shoot over to the DarwinX account and I place the orders on my DarwinX account. On the website, the login details is there for you to log in to the account, and you can follow these trades there. Currently they are still free. At some stage I will most probably be asking a price for it, but currently it is free. I will keep running it free for a while, and I just want to see how it goes. And once the accounts are showing a nice, good, solid profit, which people can see and people can follow, then of course I will have to start charging a price for doing all the effort. But anyhow, the account by DarwinX is only a demo account. Now I know many people will say demo trading is not the same as live trading, but when you're trading on a daily chart, it's the same, because on a daily chart, how must I put it to you, is not the same as when you're trading on a high frequency 5-minute or a 1-minute chart, whatever, where the prices do differ between brokers. Yeah, because you're trading on a daily chart, the prices are there. The only difference, main difference between DarwinX and InstaForex is that DarwinX, the charts or the prices run 24/5. They don't close like by InstaForex. But I have checked them out. You might lose 1 or 2 more trades that you don't lose on InstaForex, but it's okay. You can handle it. It's still tradable, and you'll still be making a very good solid profit. I must say, this system here, it's my favorite. Really it is, because you only spend, let's say, 10 minutes a day. You just come, you know the time when the broker opens, when the market opens, you know the time. You just come and have a look. Is there a signal? Yes or no? If there's no signal, you switch off until tomorrow. Tomorrow you come back. Is there a signal? If there's a signal, to draw the Fibonacci's in here takes you maybe not even a minute. To put your lines there and to work out your levels, your entry and your exit, maybe, let's say, 5 minutes. Let's say you're busy 10 minutes in total. So every day, all you have to do now is to check, am I entered? And move your stop if it's necessary. That's it. Now, I know many people say add on, add on, add on every signal, add on. Yes, you can do that. But what you must bear in mind, should the market go against you, you could land up having considerable losses. I tried it once on a demo account, and yes, I more than doubled the account in a question of a couple of days. It worked very nice, and I must say, hell, I was very impressed. But to be very honest with you, I'm a little bit afraid to do it on a live account, due to the fact that if the markets do turn against you, yeah, it could hurt you quite a bit when you've got 4 or 5 open trades, and all 5 go through a stop loss in one go. I mean, hell, that would really, that is really heart attack material. But anyhow, I'm happy at this point of time doing it the way I'm doing it. I think there are better methods, and if anybody does come up with something better, I'd love to hear from you and see how we can maybe improve this strategy. But to me, the strategy has been working very well for quite some time already. It's just a pity about the FTSE, like I said. I'll be making a video on the FTSE a little bit later on. But this year, you can go through the charts and you can see over here, right, we had an entry over here. We had a close above, brought a stop, but unfortunately it came down and stopped us out. Look at this one here again. We had an entry there, and it just went straight through up to our target over there. And you can go through the charts. Look, here's another one again. Let's draw our Fibonacci's in there, right, from the top, right, to the bottom. Yeah, let's just go and put our target line there. Just look at that, right through up to the target. Beautiful, right? Here's the next entry. There, the next signal. You didn't have an entry there. It came all the way back down. And this candle here, it gave you another entry once again. Now look at this here, right? Let's see. There. Right. Now normally, this candle opens up far above the 161 candle. I wouldn't take that trade, because the gap between your entry and the actual entry is a little bit high. I will think twice before I take that trade. What I would do though is I'll wait for a retracement coming back to the 161. So instead of putting a buy, let's say buy stop buy over here, I'll most probably put a limit buy, because a limit buy will work that when it comes down, it will trigger you into the trade and go back up again. Well, that's at least that's how it's supposed to work. So I'll most probably put in a limit buy somewhere around here in this region over here. And should it come down and go back up again, great. If it doesn't, I'll just cancel the order. Right, here's our next signal over there. Once again, it didn't trigger us, but somewhere here along the line there, it triggered us. Let's just go and have a look here. Where was this one? This one over here, right? There it is. Again, it opened up a bit high, but yeah, the pips is not that much over there because it's quite a small candle over here. Same here, but this one opened up very high above it. This one was just actually below the 161 when it opened up. I would have gone for it, make no mistake. In actual fact, you would have been triggered in automatically over there because you've got your entry sitting over here and the market opened up over there. It will enter you into the trade automatically. But anyhow, it doesn't matter because you still went and you hit the target over there. It was a nice, good, solid trade, this one over here. Also, if you mistake it, oh, where were we? Let's go and say we have got the 161 over there. We had a close, so you bring your stop to break even, and you were stopped out on break even, a small loss. Righto? Because you opened up very late, so you'll have a very small loss over there. Yeah, let's go and have a look at this one over here. Same story once again. You entered into the trade, it came right back down to you, and it took you out of the trade in a small loss. But this one you wouldn't have taken because you would have still been in this trade over here. Same thing, would have been a small loss. Let's just go and draw the Fibonacci's there and see. Right? Oops, no, you wouldn't have. You would have gone out on break even over here. Right? You have closed virtually on it, so it's not really rocket science. I would have brought my stop loss to break even and let it go. Let's go and have a look at this one over here. We had a swing over here. We had an entry over here. There's another signal over here. Let's go and see what happened over here. Right? There we've got it. We had a close below the 161 over here. Stop loss would have gone to the 161. Right? Sorry, the stop loss would have gone to a break-even position. Yeah, we had a stop wasn't, let me just bring this line down. Right, the stop was too far above it that I would have brought it in. So I would have been taken out on the break-even limit over there. That's where you would have been taken out. Here's our next signal on this candle over here. And this looks like a real beauty. There it is. And just look at this one over here. Just look at it. It just ran all the way. Now, something a guy must also remember, I think I have mentioned it previously, but anyhow, like the situation we've got over here, we've got our price, our limit, our take profit over here on 29.41. I'll most probably put it on 29.40 on the round figure. Now, the market goes and opens up over here, far above it. You will not be taken out on that price. You'll be taken out on the opening of that price. So you'll be gaining a lot more than what your target was. But also vice versa. If it opens up below your stop loss, you'll be losing more than what you had bargained for. That's also true. Right. But now we're in June this year already, in 2019, June 2019. Let's go on. Right. I wouldn't have taken this trade over here because I'm still stuck into this trade over here. But other guys would go and say, oh, let's add on over there, let's add on over here. Surely you can add on and you'll be making a lot of extra profits on a trend. Yeah, we've come along. Here's our next entry over here. Again, this one's a very small entry. You wouldn't have got, you would have been taken out on your full stop there. Here's the next entry over here. Once again, you would have been triggered in on this candle over here. Let's just go and see. What does it look like? Yeah, we would have had a lock-in stop on 0, and of course a market turner came and took us out on our entry over there. Righto, where more? Here's one more, same thing, but it's a very small entry candle, and it's I don't think you would. I think this would have been another loss over here again. That's right up to date now. So as you can see, the losses are small and the profits are quite big, and Yes, I must say I am very impressed with it. It works very good, and I think thanks to old Donald Trump, we've been having great trades on the SP 500. Uh, Honestly, it's been nice trading along with it. It's really working very well. Uh, and with that said, happy trading. And if you want to follow the system, the login details is on the website. If you go to the text version of this over here, you'll find all the login details on the WinX account with the investor password. You're welcome to log in and to copy the trades. As I said, you only need to log in round about 5 minutes before the New York Stock Exchange opens to about 15 minutes afterwards. I normally place a trade as soon as it opens up, if there is a trade to place. With that said, thank you very much and happy trading.